What is really screwed up is the world is massively in debt. The workforce is shrinking. Population growth is slowing down. It's slowing down GDP growth. So there's not enough GDP growth to pay or service the amount of debts out there. And what we found since 2008, that the answer to this debt issue has been printing of more money, debasement of currency.
So this is the M2 money supply chart. And if you go back here all the way till 1960, you can see this is in $296 billion. We're in the total circulating supply of money. And now we're up to $20,827 billion that are in circulation. That is just over 6 years. That is unsustainable. And this is exactly why the US dollar has lost 99% of its purchasing power over the past 100 years. This is the problem that Raoul Pal was talking about in that clip, and he's going to be talking about what is the solution to this problem going forward.
People think of it in terms of, at first they think it's going to be inflation, as in the price of CPI goes up, but it's actually not. It's actually something much worse, is wages don't rise, but assets go up, because optically you're debasing the currency. Your future self is getting poorer because assets are all about storing wealth for future deferred consumption. But what's happening is you can't afford as much of that now. And so your future self is in fact poorer. So a classic example is a 35-year-old now in the United States, getting married, having kids. A house is very expensive now. Compared to when Peter and I were young, it was relatively cheap, 3 times incomes. Now it's like 10 times incomes. So there's no real way of getting up the ladder. The equity market is much more expensive. Your kind of percentage share of the S&P is so much less. So the advantages that your parents had are not available to you. So that's a problem for society overall, is this issue of debasement of currency. The governments are doing it because there's no way of paying the debt. So what you're going to have to do is continue to print money. So then if that is the case, and I found out in this everything code analysis that I've talked to you about, what we found is since 2008, they reset interest rates. It's like a debt reset. The debt jubilee happened. It was everybody was given the chance to not pay interest. And everybody reset their debts on this 3 to 5 year time horizon. And so 4 years is the middle, and we've got this perfect 4-year cycle. All assets are now incredibly correlated with this cycle. Whether it's emerging markets, whether it's the dollar, whether it's rates, whether it's crypto, whether it's gold, whether it's equities, everything.
And the 4-year cycle is something we've seen historically for Bitcoin time and time again, starting back in 2012. And it's very interesting that the rest of the markets, S&P, the NASDAQ, they follow this 4-year cycle. So everything lines up perfectly with the halving. So did Satoshi know what he was doing when he set the halving at every 4 years? Something to think about.
So if we've got a super correlated environment where asset prices keep going up because of debasement of currency, i.e. the optics, because the value of the currency is going down, then your job is to find something that offsets it. So the rate of debasement, by my calculation, is about 15% a year on a globalized basis. So your hurdle rate is 15%. Now, equities have done something not far off that, but that just means you're not actually making any money. You're actually just standing still. NASDAQ, which is in a secular trend, has actually beaten that 15% hurdle rate somewhat. So it's actually helped. The traditional way of doing it would have been gold. And, I've been a long-term gold investor. I've always liked gold. But gold has not done particularly well in recent years against debasement. On a globalized basis, it still works beautifully well as a global currency. And against global debasement over time, it works. But the really strong debasement we've been having in recent years just hasn't done well enough. And many of us from the macro world started thinking, okay, we need to find, what is this hedge? What is the right way of doing this? And that's where crypto, which I've been involved in for a long time, started to really fit in here, because it offers a bunch of ways that the financial system can use it in an overly indebted system, where you've got a collateral and then like 30 uses of that same collateral. So nobody owns anything. You own a fraction of what you think you own in an indebted system. Same with a bank. You have money in a bank, it's not your money, it's actually the bank's money, and that's been proven time and time again. Bank bail-ins in Europe were particularly bad. So we've got a broken financial system, and the blockchain rails are something that's actually very useful. We can figure out who owns what. at any point with instant settlement. So it reduces a lot of the risk of the settlement layer, but also you gave the rise of cryptocurrencies, which also have this supply and demand dynamic that's interesting. There's a limited supply, and it has the properties somewhat of digital gold. And that's worked very well. If you look at that, because you've got this technology adoption of the blockchain, plus this store of value or this collateral layer, it's massively outperformed everything. So it's been a phenomenally good asset, even with these massive drawdowns en route. We have enormous drawdowns, monstrous, and still it's the best performing asset in all recorded history, almost on any time horizon. So it makes it very difficult to allocate any money in anything else. And that's why I've struggled. I just do every chart against Bitcoin or every chart against the Fed balance sheet and try and say, okay, well, what goes up? Gold has actually gone down versus the Fed balance sheet. I think that's more of a temporary state of affairs than a permanent state of affairs. Again, I'm actually not an anti-gold person whatsoever. I just think when you've got technology plus gold, call it that as a narrative, you're always going to do better. And in our job to help people navigate this journey, if you're 65 years old, gold does a great job for you. If you're 35-year-old, you ain't going to get anywhere.
So Raoul basically saying gold is dead, Bitcoin is in, crypto is here to stay. And I know a lot of people think Bitcoin right now trading at around $70,000 is too expensive. I got into Bitcoin back in late 2016 and it was trading around just under $1,000. I remember it was retesting those old all-time highs like we're doing right now. And I was thinking Bitcoin is too expensive. And I went and bought some Litecoin, went and bought some XRP. Didn't really know what I was doing back then. Coinbase only had a couple of cryptos on the exchange. Saw money go up really fast and come down even faster. Should have just bought Bitcoin over the long term. It's gone up and up and up. If you compare Bitcoin to any asset, this is the S&P as measured in Bitcoin. This red line here is the S&P since 2010. The S&P has historically gone up here. It's up 346% over the past 12 years since 2011. But compared to Bitcoin, it's gone down and down and down. It's not just the S&P. You can check gold here. Gold has gone down and down and down as well. Anything you compare Bitcoin to, Bitcoin has outperformed and everything else has lost 90% of its value. So now's the time. If you think you're too late to Bitcoin, you're definitely not. We're just getting started. Opt into Bitcoin, opt into crypto, opt out of the traditional financial system because it's a thing of the past. Let me know what you guys thought about everything in today's video. Make sure to check out our Patreon. I'll leave that in the comment section below. My name's Aaron from Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.